For tax purposes, the Modified Accelerated Cost Recovery System is used to calculate depreciation. We call that MACRS for short. In this video, we're going to discuss MACRS depreciation and review how to calculate it. There are two types of property that a business typically depreciates. The first is real property, which is simply real estate like office buildings, warehouses, and factories. And then we have personal property. Personal property is any asset that's not considered real estate, like equipment, automobiles, trucks, furniture. When calculating depreciation for tax purposes, there are a few things you need to know about your asset before you can begin. The first thing is the asset's basis. The basis is pretty much just how much the asset cost. How much did we purchase it for? The next thing you need to know is the recovery period of an asset. Notice in the table here we have cars and light trucks, office machinery, and computers and certain equipment as 5-year items. Then we have furniture and other equipment as a 7-year item. Sometimes in the problem the recovery period will be given, and sometimes you may have to refer to the table. If you look a little further down, you'll see that residential rental real estate is depreciated over 27.5 years, and then other real estate like office buildings, warehouses, things that are not residential are depreciated over a 39-year period. The next thing that we will need to determine about our asset is the convention. Now, the convention is just an assumption used only for tax depreciation. Let's take a look at these. For items using the half-year convention, they're assumed to have been placed in service in the middle of the year. In other words, in that first year, you're only going to get half a year's depreciation, and then also in the last year, you will only get half the year's depreciation. The assets that use the half-year convention are those personal 5 or 7-year items that we talked about earlier, like computers and equipment and automobiles. The mid-quarter convention assumes that an item was placed in service in the middle of a quarter. Taxpayers have to use the mid-quarter convention when they place more than 40% of their personal property in service during the last 3 months of the tax year. So we won't use the mid-quarter convention tables very much. We'll mostly use the half-year convention tables. Then we have the mid-month convention, which assumes that property was placed in service in the middle of the month that it was purchased in. The types of assets that use the mid-month convention are your real assets, like residential real estate or an office building or a warehouse. Last, we need to remember the method of depreciation that should be used. MACRS uses 200% declining balance, 150% declining balance, and the straight line method. The key to correctly calculating the depreciation is going to the correct table. So the method and the convention is built in to the depreciation table. So if you choose the correct table, your percentage will be there for you, and you can easily calculate your depreciation. It's really not as difficult as it may seem. So this is our half-year convention table for personal property. So if we are depreciating an automobile, a computer, a piece of equipment, furniture and fixtures, we're going to come to this table and we're going to find the correct useful life. We may be given the useful life, or we may have to come to this chart to find it. But we go to the useful life and come down to the year of depreciation. And so remember, this is the half-year convention, so all of these percentages are already halved, so that we don't have to do that. It's already built into the table. So let's look at this example. If your company purchased some equipment on February 5th, 2022 for $20,000, the year one depreciation would be $20,000, which is the basis. Equipment is a 7-year item. We're depreciating it for year one, so I'm going to multiply my basis of 20,000 times the 14.29%. So the depreciation for year one is $28.58. The next table is the mid-quarter convention, and I mentioned earlier we're probably not going to use this table very often, but if we did, we would look at the useful life of the item, decide which quarter it was placed in service, and then find the year of depreciation, and then we would find our percentage. Now, before we go on any further, let's talk about the Code Section 179 election to expense. So the IRS put this in place so that businesses could quickly expense the purchase of their expensive assets instead of depreciating them and taking the expense over the next 5 to 7 years. There were limits placed on this deduction, though. You can only take the deduction for personal property. You could not take any Section 179 expense for real estate. There was a maximum yearly amount. It's a very large amount. Like for 2022, the amount was $1,080,000. So it is a high threshold. But the thing that keeps taxpayers from using Section 179 a lot is the limitation on the taxpayer's taxable income. So in other words, if you purchased an item for $100,000 that you wanted to take the Code Section 179 election, but you only had $20,000 in taxable income, you could only take $20,000. It's up to the amount of your taxable income. And then came the bonus depreciation, which really is much like Section 179, but there is no limitation on the taxpayer's taxable income. So with bonus depreciation for 2022, 100% of the qualified property can be expensed in the year it was purchased. So taxpayers typically now take the bonus depreciation. They don't worry about the Section 179 or going to the depreciation tables for their personal property when they can take the bonus depreciation and just go ahead and expense the cost of their asset. But notice next year the bonus depreciation will be only for 80% of your personal property acquisitions, and then it gets lower every year after that, from 60 to 40 to 20, and then will be phased out by 2027. Now these are the tables that we're going to use to depreciate our real property. So for residential real estate like apartment buildings or a rental house, we're going to come to the 27.5-year table with the mid-month convention. Notice it's got the number of months across the top. So we need to know the month that the asset was placed in business. And then for the 39-year real estate table, this is for all other real estate that is not residential, like the office building or the warehouse. And it also has a mid-month convention, so we would find the month that was placed in service and then the year we're depreciating, and then use that percentage. So for example, Baxter purchased an apartment building for $500,000 in July of 2022. Of the purchase price, $100,000 was attributed to the value of the land the building sits on. Remember, land does not depreciate, so we always have to separate, if we make a purchase of real estate, separate out the cost of the land. The depreciation calculation would be the depreciable cost of the building, which was the $500,000 less the $100,000, times the percentage from the residential real estate table. So it was placed in service in July, so we'll come over to 7. We're depreciating year 1, so it will be $400,000 times 1.667%. Remember, these are percentages. And so the depreciation on our $500,000 apartment building for year 1 will be $6,668. In this example, Lawrence purchased an office building for $330,000 in January of 2022. Of the purchase price, $30,000 was attributed to the land. So we'll back the $30,000 out of the purchase price of $330,000. So the cost of the office building is $300,000. This is not a residential type real estate. It is just an office building. So we're going to come to the 39-year table and find the year it was placed in service. It was January, so month 1. And for year 1, the percentage is 2.461%. So the depreciation on this office building will be $7,383. Remember, we cannot take Section 179 expense elections or bonus depreciation on real estate items. You can only choose to take the bonus depreciation on personal property purchases. So let's look at this next example. Johnson Land Movers purchased equipment costing $500,000 in 2022. The company has net income of $110,000. What is the maximum depreciation deduction the company can take? Now, we can't use Section 179 because we would only be limited to a $110,000 deduction, because remember, Section 179 expense is limited to the company's net income. But since this is personal property, we can use the 100% bonus depreciation. So Johnson Land Movers can take the full $500,000 expense deduction in 2022 for their depreciation. Now let's try to summarize what we just went over. If you are depreciating personal property, to get the maximum depreciation, take the 100% bonus depreciation for the entire cost of the asset. If the problem asks you not to use the bonus depreciation, then try to take the Section 179 expense election. But remember that expense election is limited to the taxpayer's net income. If you're asked to depreciate an item using the depreciation tables, and sometimes you are, use the half-year convention table for personal property. So any property that is not real estate, come to the half-year convention table, find the useful life, and then the year of depreciation. If you are in the 3rd year of depreciation for a 7-year item, then your percentage will be 17.49%. Remember, this indicates the recovery year, the year that you are depreciating the item. So this would, year 1 would be 2022, year 2 will be the amount you're going to take in 2023, year 3 would be the amount that you're going to take in 2024, and so on. For residential real estate, If you're depreciating an apartment building or a rental house, real estate that's residential, you're going to go over to the 27.5 year mid-month table, and you're going to select the month the item was placed in service, and then find the recovery year, and then multiply times that percentage. If you're depreciating other real estate, use the 39-year table and find the month that the item was placed in service and the recovery year, and then multiply times the percentage given in the table.